But I'll tell you, we'll talk about some honest money right now with my friend David Morgan of the Morgan Report. David, how you doing?
Doing well, Alan. Thank you.
I've missed you the last couple of weeks.
Have indeed. Well, I've been busy. I know that's an excuse, but it's also true. We just finished the Silver Summit here in Spokane, Washington, and it was quite an event. A lot of people from all over the world talking about, as you were doing the intro, what's really going on in the financial system and why this thing is corrupt and the possibility of what could take place in the future.
David, my father circulated to me yesterday and then a couple of days earlier on the tax treatment on silver and gold, and I kept telling him, no, it's if you have a capital gains, you pay capital gains taxes unless the bill that's been sponsored by Dr. Paul every Congress were to get passed. Could you explain to people who might have been deceived by that chain email exactly how selling silver and gold at a profit is taxed?
Well, first of all, I don't give tax advice, so what I'm going to give you will be my opinion. But the Silver Institute, which is a body based in Washington, D.C., that follows the silver market very, very closely, has been an advocate of getting silver status reduced from the current situation, which, again, you could verify at the Silver Institute. It's my opinion. That is treated as a collectible, and it's at a higher rate than a normal capital gains. Almost every year, the Silver Institute has asked and proposed legislation that would get silver and gold treated as normal capital gains tax rates, not the collectible tax rate. That, again, is my understanding currently exists.
All right, now let's talk about the silver. Where do you think we're going with the silver market?
Right now, we're going sideways, as I think everyone knows, and I think this is going to last through the election. Depending on the outcome of the election, I see one or two scenarios. Were Obama to get reelected, I think you would see an almost immediate response in the precious metals to the upside. Were Romney to get elected, you probably see some further takedown in the metals on a temporary basis. And that's about as far as I can go right now, Alan. The real technical work I'm saving for our members only and showing the breakout channel and how to play it, et cetera. But that's a general outline, exactly how I see it presently.
Let's talk about your paid members. What would you have to do to be a paid member?
Well, right now we're keeping our rates extremely low, and they have been extremely low for a very long time. We're going to keep those rates available to the end of the year. After that, we're going to increase approximately 30-40%, depending on what service we're talking about. But it's a very simple case. You just go to silver-investor.com and you look at the outline of what you get as a paid subscriber. And basically we give our best thinking for our paid members, not only in money, metals, and mining, but also I show you the trades that I'm putting on. And most of those have been very successful. We're still working a spread trade, which has been kind of tough to hold on to. The spread is long silver, short gold. Doesn't mean I'm against gold at all. What a spread means is that silver will outperform gold. Put that trade on quite some time ago, and it's worked very favorably, and it's kind of backed off recently because the metals have been backing off, as I said, and going into this channel formation that we've been witnessing for the last couple of weeks, and I expect will continue for a few more.
If you're following a trend, typically if we do repeat what happened in 2008, where the equities begin to fall on election day like they did 4 years ago, silver and gold last time around, typically in the beginning of a sell-off, will fall in sympathy, will it not?
Absolutely. What happens is there's so much leverage in the system that even the gold and silver believers that are managed money, meaning large hedge funds, pension funds, money managers that have some exposure to the gold market, et cetera, what happens is when the market starts to go down, they will sell anything that they can. In fact, they usually will sell their winners to meet margin calls because most of them are that leveraged. So it usually does go down temporarily, and usually the first to rebound would be the gold and silver markets themselves, and the next to rebound after that are the gold and silver equities. I've been on record. I want to give it, this is for my members only. I'm happy to give it to your listening audience, Alan. I'm on record to calling the bottom in the mining equities. That was back in May. And I have said, and this question has come up a few times already, and you're asking it now, I think if there were to be a huge sell-off, that the worst that we would see is we might touch that May bottom. So in other words, the people that pay me for my insights have already hopefully taken my insights to heart and bought in the May, June, July time frame. So if we had a huge sell-off, we might get back down to those. Those people probably wouldn't get hurt. In other words, wouldn't get that low. I think the low is in. So the worst case I can possibly see, the low for the mining equities is already in. Doesn't mean that from this point right now, and we had a huge sell-off, it wouldn't go lower. Sure it would, but it wouldn't hit that low that we've already established. That's number one. Number two is don't let these temporary huge oscillations scare you out. You know, I have an expression that I coined some time ago that the metals market will either scare you out or wear you out. You'll get scared out on a large move up or down, depending on if you're short or long. Of course, I'm biased and very long, but on a big move down, it can scare a lot of people out. The other one is wear you out, where you get these long consolidation periods where you bought it at, say, 35, and it's oscillated between 35 to 26 to 32 to all over the place, but it hasn't really broken up above that $35 level for well over a year. And that wears you out. You're sitting there at 35, you believe the silver story, and you think, I really like this, I think it's great, but a year and a half goes by and you haven't made a profit. And your friends at work are telling you about, what IPO they got on, or that they're still holding their Apple stock or whatever. And these people get worn out. So you know what? I just don't think the metals are really all they're touted to be. I'm getting out of silver, and I'm going to buy some Apple stock, and away they go. And of course, as soon as the last guy that thinks that way gets out, is usually when the market turns and starts going up again.
David, if you already hold physical silver, what's your advice?
Well, one is don't sell it unless you absolutely have to. Hold on. Usually what happens in all markets is you get the largest move in the last part of the cycle. And I believe that's extremely true in the metals markets. In fact, I'm on record as saying 90% of the move comes in the last 10% of the time. I think this market's going to last probably until 2014, 2016. So for an example, I don't want the numbers to become critical, but it does serve the idea. Let's say 2014 silver is at the $75 level. You could see silver move from 75 to, for example, 150 or 200 within the final 6 months of the move fairly easily. If you look at 1979 as an example, 1979 silver started the year at about $6 an ounce. January 1980 it hit 50. So that market was about a 15-year-long bull market. But all you really had to do if you really wanted to participate very favorably was to be invested the last year, and you would have caught most of the move. There were a lot of people that probably were invested 14 years that bought silver at the monetary value or just under it of $129 an ounce or maybe under $2. You could buy silver at under $2 an ounce a long time. I'm talking this 1960s now. And then watched it go through, 1965, 7, all the way to the 70s, 75, 8. You got into, 78 maybe. And you said, geez, it's sitting here at, $5. I bought it under $2. That's a pretty good gain, especially in those days because we didn't have the inflation yet at that time. It started under the Carter administration where it really ramped up. And they sold out, and they sold out at that time a very good profit, only to see silver in the next 2 years go from that, $4 to $5 level all the way to 50. I mean, it was a 10-bagger from that point on. Now, I'm not saying we're going to get a 10-bagger from this point on, although I wouldn't rule it out. So I just want to get the idea very, very clear that most people that look at these markets say, oh, geez, they moved too far. You could have got gold under 300. You could have got silver under $5. They've made their move. I'm not touching this. Well, I've got news for you, folks. Really, the biggest part of the move, in my very studied view, is ahead of us, not behind us.
With that in mind, the Silver Report. David, tell them about that.
Okay, it's a monthly newsletter and updates. And the updates are done by Camtasia. Some of the listeners probably know what that is. But basically, it's a program that lets you look at my desktop, and it's my voice, and I go through and I put up the charts, I put up the commitment of traders reports, I put up anything pertinent to a trade I'm putting on, be it long, be it protection, be it the bond market, be it the U.S. dollar, whatever, and I explain why I'm doing what I'm doing and what my points are. It's very specific. It's not trading advice I do for educational purposes only, but I do show you what I'm doing, and I'm allowed to do that. As far as the basic report is on top of that service, and that is a monthly edition of Our Best Thinking on money, metals, and mining for everybody. We do take letters to the editor. I answer those for the benefit of all. And lastly, if you're a paid member at the beginning service, which is our basic and trading service, you are allowed to send us an email, and myself or one of our staff will answer that email for you. So it's quite a deal at $129 a year, which exists until the end of the year, and after that it's going up to $199 a year.
David Morgan, ladies and gentlemen, the Morgan Report. David, it's always good to speak to you, buddy.
Thank you so much, Alan.
Have a good day.